Hello, this is John Ward with Physical Gold Fund. Recently, I was privileged to hold a candid conversation with one of the most connected and influential people in the physical gold market. The gentleman you're about to hear from holds a senior position in one of the 5 largest precious metals refineries on the planet. Because of his current position and his decades of prior experience, he has a deep inside knowledge of today's physical gold markets. His insights and his unique perspective on these markets goes way beyond what you will ever find in the mainstream press. Due to the sensitivity of the information he reveals in this interview, his identity and that of the refinery he works for have been withheld. Now, here is the conversation we recorded.
Hello, John.
Great to have you with us. The largest refiners of precious metals in the world, the company is notable for being one of only 5 global referees for the London Bullion Market Association. This means that the company certifies all refineries worldwide for their ability to produce gold that meets the LBMA good delivery standard. To start us off, please tell us a little bit about your background in the precious metals industry and the position you hold today.
With pleasure, John. And thank you very much for giving me the opportunity to talk also on to our customers directly. I started in 1978 as a telex boy in the precious metals department of Credit Suisse. That's how I earned my life during university. In 1985, I changed to another large Swiss bank, to UBS, and I stayed in the banking business until 2001, when I had the feeling, the impression that physical business in precious metals is getting more and more important. And this importance, to some extent, I found was neglected by the banks. That's why I then moved into a precious metals refinery. Swiss Refiner, as you said, one of the largest in the world, and then built up the precious metals trading, funding, hedging business for this refinery here.
Well, great. So let me ask you now, in your day-to-day work in this industry, what are your primary sources of information about the precious metals markets?
Well, of course, we have by nature a lot of direct information. If you look at trucks driving in and driving out, if you look at the bar lists and you look at the capacity utilization, that gives you already some information. Could be, however, misleading if you try to correlate the physical business with the prices. So there you have to be very careful. But information, of course, is also depending on the network that you have. I mean, being at my age, there's a lot of downs also, especially, if you get up in the morning and you feel your bones. But it has also a lot of advantages. The network that I have and we have here is huge. And we are, since the very beginning, an internationally oriented company. So our contacts really are all over the world. We are proud of this network, and therefore I would say less from the newspapers, but more from the market is where our information is coming from.
I get it, from the people that you talk to personally day by day across the world. In 2013, I recall you commented on the tightening of physical supply in the gold market and even the difficulties you were having in sourcing material. In fact, as I remember, you remarked that in 30 years you'd never seen anything like it. Is that situation still true in 2015? How difficult is it to source the metal you need today?
The situation has not changed. It is really true. It is difficult. It is maybe difficult is also reflected by the price. It is getting more and more expensive to get material out of the market. And it is also seen that there is less liquidity in the physical precious metals market than it used to be in the past.
So there's a paradox here, isn't there? Because, the price is sort of perceived generally as the price of gold on the spot market is seen as low. What's your understanding of the current price of gold? How well does price today reflect the realities of physical supply and demand that you've just described?
Not at all. Don't forget, we have a huge amount of artificial gold or paper gold or however you would call it, floating around the market. It is sometimes you can just see the figures if you look at the numbers of futures exchanges. And a lot of metal you can't even detect because it is somehow within some derivative product, which at the end you have no clue how much it is and then on which side it is. And the other thing is also nobody is interested in any physical delivery at the end. These products, they are all cash settled and people are happy, just to use the spot market as a benchmark. And the product itself never ends up in physical market. This, of course, to me, looks dangerous. If we once will have the situation that people say, no, okay, now I have a long position that expires, I want the physical. If everybody would do this, for sure, the physical is not around.
But that's a big if, of course. I mean, is it your belief that this sort of paper market can be sustained indefinitely with a huge mismatch between the price in the market and the supply and demand in the physical? Can this go on forever, or will it break at some point, do you think?
Yeah, you see, that depends very much on the behavior of the market participants. Generally, if you look at the situation all over generally that we have now, nobody will understand the price of gold. Now we have serious geopolitical, not only risks, but already issues. We have a financial world with all the debt crises that we have never seen for decades. And yes, we have a relatively low gold price that is in no correlation with the physical market. So question mark after question mark. Will this continue? I think it depends very much on the behavior of the people. As long as market participants are happy for cash settlements, this can go on forever. Then spot market price of gold is nothing more than a number, nothing more than a benchmark. People are happy, cash settlement, so they take the currency. If this behavior should change, yes, then I don't know. Then it could become dramatically dangerous.
Well, going back to the physical market, you're in an unusual position to observe the flows of precious metals across the world. And I'm curious to know what you're seeing. Where is the gold coming from? Where's it going? Who are the main sellers? Who are the main buyers? If you could sort of summarize the picture for us as it is today.
This is very easy, actually. You have almost just one direction, from west to east. Maybe a small exception we have seen within the last maybe year or so, an increased demand in the Western world in Germany. But this is in no relation to what we see. The flows of the metal ends up in Asia. It is mainly China, also India, and to some extent also the Middle East.
If you were roughly to put a percentage of it in terms of the percentage of buyers in the East and the percentage of buyers of precious metals in the West, how would you map it out?
Well, you see, of course, there you have, for the whole market, I think the figures published by GFMS or other researchers, they give you a more accurate all-over picture. In our case, however, it is 90% going to the East and 10% in our Western market.
That is a pretty dramatic distinction. And so obviously it begs the question, why is there so much less demand for gold in the West than there is in the East? Physical gold, that is.
Well, I think the Western financial markets just offering more possibilities than you have in the Eastern markets. And people are happy to move out their gold positions, to sell their gold from an ETF and jump into some shares or whatever products are available here. The flows are also more driven by the demand, but of course, where there is a buyer, there must be a seller. And at the moment, it looks very much like people are very confident in the general financial market, and that's why we have gold price around these levels.
Well, let's look a little more closely at demand from the East, particularly China, where demand for gold has been high for several years, but it seems rather opaque. It seems that it's not really easy to know how much gold China is accumulating because there are doubts about the official reports. What's your picture of that? How much variance do you see between the official reported accumulation of gold in China compared to the reality?
Well, I agree absolutely with you when you say it's opaque. It is. I have the same feeling. I don't know myself either how accurate these figures are. I have my doubts there. It is not only that China is the largest or the second largest importer of gold, they're also the world's largest producer. And where this gold all ends up, I must say, I am always surprised about the retail demand in China. It is really unbelievable how much gold ends up in decorative items, in jewelry, and also in bar hoarding. But the big question mark that we have to put there is what are the figures of the People's Bank of China? And then I think there you can estimate. You can believe in these figures. My personal assumption is figures, the holdings be much larger than published.
Just staying with China for a moment, we see that they tend to prefer these 1 kilo bars at 4.9 purity to the traditional LBMA good delivery bar, which is 400 ounces at 999.5 purity. Would you say that China's effectively imposed a new international standard on the physical market?
Well, it has definitely imposed a new standard. It is also interesting to see, that 995 gold bars, these were the bars typically for central bank holdings. Then, when the demand was on the consumer side, these bars were converted into, from 1 gram wafer to 1 kilo bars. That was always the case. Now, however, we have such a huge demand from China. Given the demand that is over there, yes, they have established a new standard.
So has that meant over the last couple of years you've actually had to melt down and re-refine a whole lot of 400-ounce bars for China? Because if you have, I'm curious to know where you get the bars from. Where are they coming from?
Well, the bars, they are coming what you easily can call the market. If you go back, there were all these ETF liquidations, and the ETFs were holding bars in the form of the 400-ounce bars. And then there are a lot of physical liquidity maintained. In the London gold market, it actually is in the 400-ounce large bars. That's where it came from. So it was one of our jobs to take these bars, melt them down, refine them up to the 4.9 standard, and cast them into kilobars.
So were a whole lot of these bars coming from London then?
A lot of if you look at the ETF liquidations, this gold had to go somewhere, and that was all converted. And it's also, I think you see every here and then, you see also some liquidations, physical gold held with COMEX, NYMEX, and that's it more or less. These are the sources of gold other than newly mined.
Well, what about scrap? I mean, that traditionally has been at least one source of gold. What's the status of the scrap market today?
It has decreased also there. We saw a dramatic decrease when the price came down. Put it the other way, when we had $1,900 an ounce, it was definitely an incentive to look at melting down some of your old jewelry and whatever was around there. We have now levels of around 1150, and this incentive is gone. So a lot of scrap coming from old jewelry is just not at the market anymore. We have seen, however, a certain small increase in the scrap business from the industry, from jewelry industry. When they're processing and they're producing their jewelry, there is always some waste coming back. And then there is a certain price-sensitive scrap, very opportunistic, coming every here and then out of Asian countries, and not China or India, but other countries in this area. Has to do maybe sometimes something with the currency, exchange rate, and sometimes also with certain tax issues. But this is not a steady flow. Overall, I can say scrap has decreased remarkably.
So from your point of view, I'm getting the impression it's not a very significant source of gold for your business. Is that correct?
Not the time being, no.
Well, let's look at the mining sector then. Infrastructure investment in mining has been dramatically reduced since 2011. How do you see that impacting future supply of gold?
I think this is a very important question. Of course, at the moment, the mining companies are not doing well. Just have a look at their share prices. If one of the results is that they are not exploring anymore, but saving costs, that's the big issue for them. I think it is unavoidable that within a few years we will see that there was less exploration done in the past, and that means there will be less gold in the market. Although I must say, if you look back, the mining companies still were able to produce, to increase the general production still at a pace of 1.5 to 2.5% per year. However, now with the present cost situation, stop of exploration, I think the only reasonable conclusion is that in a few years' time we will have less newly mined gold.
And if I understand this right, if the price of gold rises at that time, it takes the mining industry quite some time to catch up and start increasing production again. Yeah.
Yeah, absolutely. And don't forget, we have to set up a mine is a big investment. Even for a small venture, you easily talk about a few dozen million US dollars. And this said, even if you explore and if you know how much is in the ground, you still don't have a mine that is producing. And the investment of a few $1 million means the investors must feel comfortable with one side with the price of gold. And also, in general, the environment, political environment, financial stability must be there. You must believe in the safety of your investment. We see both now. We see both these points. I would not say that they are very positive. On one side, the gold price is under pressure, and on the other side, also the geopolitical situation in those places where you still have, where there's a potential place for production. Also, these places are not the most interesting places for investors. So I see a double threat there that will have a result on the future production.
So are we looking at a future where there could be, let's say, a rise in the price of gold, greater demand for gold, physical gold in the market, but a squeeze on supply to meet that demand?
This is absolutely possible. Because also, I think, since the last move up, a lot of scrap has already come to the market. So if it is moving up again, I don't know how much scrap still is around, to compensate the smaller volumes coming from the mining industry. On the physical gold, I'm very much on the bullish side. I think we will have let's put it this way, the danger of less supply is bigger than the comfort of more supply. And that should have an impact on the price. Yes, and then do it in physical form.
Yes, and also maybe should be an alert to those interested in purchasing gold to do it while the gold is available, and do it in physical form. Thanks for that emphasis. What can you tell us about your company today? Just to introduce to some of the listeners who maybe are not familiar with your company.
Well, one point for sure is we are a precious metals refiner. We do only precious metals, and we don't diversify into any other metal or materials or ceramics or whatever. We are precious metals, and we will always be precious metals. We are a fully integrated service provider. That means we refine, we melt, give our customers the possibility to maintain metal accounts. So it is kind of a combination, you could say, of banking services and refining services. However, what is on the financial service side always must be related to physical metal. And the other point, we are a Swiss refinery. We have in Switzerland, we have the only country in the world that has a legislation for trading and processing precious metals. Security and safety for our customers is guaranteed by the Swiss government at the end. Then the other issues about Switzerland, I don't need to mention. We are a safe place. We have a stable currency, or maybe even a too stable currency. We have open financial markets. That is maybe, in a nutshell, what is different than with other refineries.
I believe you've been expanding capacity recently. Can you tell us about any new initiatives that the company that might be of interest?
We have been a few investments. And let's say if we look at Europe, we are investing and we want to grow very much on the jewelry and watch industry. And if I say jewelry and watch Europe, that means the high-end jewelry and watch makers. We are expanding there with innovative products, designs, alloys, always in very, very close cooperation with our customers. Then looking at mining partnerships, there we are expanding in Latin America. We have just opened affiliate in Chile, in Santiago de Chile. So we are trying to provide even more and better services for the Latin American mining industry. And then we have some, let's say, undertakings, ventures, together with the United Nations and some government institutions. We are looking at the artisanal mining industry, both in Africa and also Latin America. I mean, although roughly 10% of the gold produced is coming from artisanal miners, but they occupy 90% of the workforce in gold mining. So, and they are working, sometimes with very, let's say, outdated technology, maybe sometimes even with dangerous technology, and just want to mention mercury and environmental issues. We have been approached, and we're looking ourselves also for these contacts at the UN, certain governments, and the response was always very, very positive. And therefore, we have considered this one of the areas where we will invest more time, more money, and grow.
That's most interesting. Do you have any final thoughts to share with us about the current state of the physical gold market?
Well, if I am honest, the only thing I could share now with you would be that I'm perplexed about a discrepancy between the prices that we have and the situation in the physical market. This is something that I still do not understand. It's a riddle for me every day. The physical business, for all people now interested in precious metals, the physical side of this business should be given more emphasis. If I believe in this situation, all clever plans, structured products, and whatever are offered in our market should be checked very, very carefully. And I maybe sound old-fashioned, but if you are interested in precious metals, go the old-fashioned way, do it physically. And I think the market is going to be very, very interested also in the near future.
It's been a pleasure talking to you.
My pleasure too, John, and thank you for giving me the opportunity.
And on behalf of all of us at Physical Gold Fund, thank you to our listeners. We look forward to joining you again soon.